Your assignment is to complete page 18, the additional 4 transactions. The first of these transactions is for July 15th, where you sold some unused equipment for $400 cash. To record this transaction, you have to put the $400 that was received in cash underneath the cash account. And because training equipment was sold, the value of the training equipment account goes down by $400. Do the math and change the value for the balance. The old balance was $7,500 plus $400 means the new balance in cash is $7,900. The new balance in the training equipment is $94,600. On July 18th, $375 was paid to Central Supply Company for accounts payable that had become due. This means that cash was taken out, $375, and because it was paid, the accounts payable goes down by $375. The cash account now has a value of $7,525, and the accounts payable account has a value of $3,680. On July 21st, the owner invested an additional $800 cash in the business. The owner has added cash to the business, so the value of the cash account goes up by $800. And because the owner wants to have it recorded that $800 was added to the equity account, the capital account, goes up by $800. The two totals for each of these accounts is increased as well. On July 25th, they purchased equipment from Niagara Sports Limited for $3,000. $2,000 was paid in cash and $1,000 will be paid in 30 days. This is a transaction where we not only have 2 accounts that are affected, but this time we have 3. First of all, $2,000 was paid in cash to purchase this equipment. The total value of the equipment was $3,000, and the remaining $1,000 was for accounts payable. The totals are increased or decreased as the case may be. So what are generally accepted accounting principles? These are standard rules and guidelines for accounting. The first of these principles is the business entity principle. Each business is considered a separate unit or entity. For the purpose of accounting, the financial data for a business must be kept separate from the owner's personal data. The cost principle shows that assets are shown on the balance sheet at a cost of their acquisition or construction. Some of the key ideas in Units 1 and 2 that you should be aware of. First of all, the purpose of accounting. This definition is to provide financial information for decision making. We need to know about liquidity order. This is the order in which assets that last a short time are listed. The maturity date governs the order in which liabilities are listed on the balance sheet. Liabilities are listed according to the order that they are to be repaid, with the soonest repayments listed first. Your assignment is to complete questions 13 and 14 on page 20 and exercises 9 to 14 on page 21 to 24.